This is the Illinois Nutrient Loss Reduction Podcast, episode 37, Crop Insurance Deadlines, Cover Crops, and Pandemic Relief. I'm Illinois Extension's Todd Gleason. We know agricultural producers who have coverage under most crop insurance policies are eligible for a premium benefit, that's right, a premium benefit, from the United States Department of Agriculture if they planted cover crops during this crop year. The Pandemic Cover Crop Program, or PCCP, offered by USDA's Risk Management Agency, RMA, helps farmers maintain their cover crop systems despite the financial challenges posed by the pandemic. Now, the PCCP is part of the USDA's Pandemic Assistance for Producers Initiative, a bundle of programs to bring financial assistance to farmers, ranchers, and producers who felt the impact of COVID-19 market disruptions. However, Brian Frieden, the director of the RMA's regional office in Springfield, Illinois, says there is a hitch in this one program. The reporting date to be eligible for the cover crops benefit part of crop insurance is a month earlier than regular acreage reporting dates.
And that date is, like you said, earlier than their normal reporting date, which is June 15th. July 15th is typically the reporting date for crop insurance and for FSA. And what this program does, it provides premium support for producers who have crop insurance and planted cover crops, typically late summer, fall of 2020. So the premium support is $5 per acre on acres planted to a cover crop and then insured this spring.
Again, the reporting date to receive the cover crops benefit, $5 an acre, is this month, June the 15th.
The good news is they'll automatically receive the benefit if they file a report of acreage, the 578, with their local FSA office. So they'll just need to get an appointment. Obviously, there's still some COVID staffing limitations, but if they can call their FSA office up an appointment and get that, at least the cover crops reported, that information will make them eligible for this discount.
Again, that's Form FSA-578. Brian Frieden says the form is fairly simple to fill out.
So on their 578, it's typically what they would normally report, the cover crop type or variety, the number of acres of the cover crop, and then a map with the approximate boundaries for the cover crop. Planting dates, planting patterns, producer share, and then if it's irrigated or non-irrigated.
Now, the PCCP provides premium support to producers, it's really a discount, who insured their spring crop with most insurance policies and planted a qualifying cover crop during the 2021 crop year. The premium support is $5 an acre, but no more than the full premium owed. Illinois, Indiana, and Iowa have some existing programs from producers to receive a premium benefit for planting cover crops, and in those states, participating producers will receive this as an additional benefit. All cover crops reportable to FSA are eligible and include cereals and other grasses, legumes, brassicas, and other non-legume broadleafs, and mixtures of 2 or more cover crop species planted at the same time. However, certain crop insurance policies are not eligible because they have an underlying coverage which would already receive the benefit or are not designed to be reported in a manner consistent with the report of acreage form FSA 578. PCCP is not available, for instance, on the Whole Farm Revenue Protection Policy and some other crop insurance programs, says Brian Frieden.
So the reason there's certain policies that are not eligible because either they've already received the benefit or they can't be designated to and reported consistent with how the 578 is set up. So whole farm, like you said, supplemental coverage option, enhanced coverage option. So these are all, and margin protection, where they're basically on top of an existing policy. So those underlying policies are eligible, but what sits on top of those are not. And whole farm then is obviously a separate policy, and it's not reported that way. So
again, the PCCP is not available for whole farm revenue protection policies, ECO or enhanced coverage option policies, hurricane insurance protection, wind index, and supplemental coverage option, or SEO. Stacked income protection, stacks, and margin protection, MP policies are only eligible for PCCP when insured as a standalone policy. Stacks and MP endorsements to underlying policies are not eligible for PCCP. Just contact the FSA office. You'll need to do that anyway to report by June the 15th to find out your eligibility status and fill out the FSA-578 form. Again, PCCP does not change acreage reporting dates. Those come July the 15th, or reporting requirements or any other items and terms for your regular crop insurance policies. Nor will you get a check for the PCCP. It is a discount on the premium for those policies, says Frieden.
FCIC and the crop insurance companies will account for that amount when they calculate the total premium. And then when the crop insurance companies will adjust those bills accordingly when those bills are sent out in August.
For farmers in Illinois, Indiana, and Iowa, where there is a separate state-run cover crop insurance program, the discounts will be in addition to those programs.
The states have done an excellent job with those programs where they have partnered with RMA for these discounts. So the premium support, or the $5 per acre that they get here, is in addition to what they may get through some of these state or other programs that are out there. So we just want to make sure that for a producer that has signed up and ended up getting accepted for those state programs, that they'll also get this. And if they've reported, they should have that. If that information should be there, but they may want to make sure that everything is in place.
Oh, and that in place, says Brian Frieden, again, who's the director of the regional office for RMA in Springfield, Illinois, also means that after June the 15th, those July 15th dates and other crop insurance reporting requirements remain in place.
Now, I think the important thing is producers, if they do have cover crops and they've got crop insurance, to go ahead and contact FSA and get those cover crop acres reported by June 15th. Also, USDA and RMA have a news release and frequently asked questions that address, some of the things that producers might consider when they're trying to get this done. So we just want to make sure with a short timeline that producers take advantage of this program.
The web address for more information, by the way, is very simple. It's farmers.gov. That's farmers.gov. If you scroll down under coronavirus updates, the first thing you should find is Pandemic Cover Crop Program. Well, you've been listening to episode 37 of the Illinois Nutrient Loss Reduction Podcast, Crop Insurance Deadlines, Cover Crops, and Pandemic Relief. The program is produced in conjunction with Illinois Extension Watershed Outreach Associates, Jennifer Jones and Rachel Curry. I'm Illinois Extension's Todd Gleason.